This is our Forex blog for July 6, 2011. And like most days, we really want to buy the strong pairs versus the weak ones. Yesterday, the dollar was stronger than the yen, and therefore today, when it showed some strength, you might have preferred that one over the yen. The euro continued its downslide today, and there were times when the pound was extremely weak. So basically looking for euro, dollar, and pound dollar sells was a high probability. Here is the 5-minute euro dollar chart, and you can see after yesterday's downtrend it came back up to the hourly and couldn't get above it, went sideways for a few hours and then broke down. This is a very high probability place. Anytime you have a big move down, a pullback, that's a good trade. And when you get a pullback followed by sideways low volatility patterns like this, it's even a higher probability trade. Our Intella stop went short right here, 44.50, and it kept you short all the way down until right here, 43.74. So that made about 75 pips. It's usually pretty risky to sell below the lower band or buy ahead of the top band, but you can see this is incredibly weak and there's no pullback. And so, right here when it kind of made a little double top right there and it couldn't go higher and there's almost no statistical strength compared to the weakness, this is a pretty high probability place to sell, and usually the market's going to go to the next fib target. The fib target of this first wave is pretty far down, so it's not too likely to get there, but you can see it did actually get there 2 hours later. So if you went short and just use a trailing stop, you get out here at 32. Short somewhere up here around 63 at the double top, 30 pip move, and at that point it usually becomes risky selling underneath there when it's gone down and then gone down again. So if you see some weakness fall off when it's way underneath the lower band, it's at one of my Fibonacci profit target levels, you might go for a counter trend trade. The first one pretty much broke even or maybe lost 5 pips. The second one you're in somewhere around 08, you're up about 20 pips right now and it hasn't got stopped out yet. So initially you trade with the trend. When the market's down statistically too much, you look for counter trend trades. You can see right here this signal is a 4-hour trend reversal buy. Usually after you get one of those signals you get a nice 30 to 50 pip bounce. So you might have traded this one here and made a few pips or broke even, and the second one 20 pips. It's probably likely to continue. Remember, the pound also was weak, and it also sold off yesterday, rallied up to the hourly here, went sideways. I would say at least an hour is what you're looking for. In this case, maybe a little bit over 2 hours. Broke down right here, and notice our trailing stop kept you in here until about 30, and unfortunately missed that next wave down. This one wasn't quite as weak as the euro, and so on the first pullback here it became a pretty high probability place to sell. You only made a few measly pips on that trade. Came back up and did the same thing the euro did, double topped right here, right underneath one of our Fibonacci retracement levels. So it's major resistance there. Once this area is broken, it's likely to have some major selling, which it did. Small profit here, you go short again here, and you can see it fell underneath the lower band. Again, always draw your fibs. When they get down near the lower band, draw your fibs on the last wave, and don't be greedy. Usually get out somewhere between the first and second fib target. So if you had shorted this kind of when it double topped right here at 17,